So a few key things. One, of course, as you rightly mentioned, that we are in the midst of the earnings season. And the good part is so far, if you look at the earnings trajectory, at a headline level, the earnings have been largely in line with consensus estimates. So if you look at the 36 Nifty companies that have reported numbers, there is about a 19% YOY growth in terms of earnings, which means that estimates for FY24 and 25 as a whole has remained largely unchanged, which bodes well from a market perspective. The second factor for the market to now look forward to is post the vote and account is the budget that will be presented once the elections are out of the way. And the vote and account clearly sets the path for the same. A few key things that the market will watch out for is whether A, there are any kind of push or policy announcements in terms of bringing the mass consumption or the bottom of the pyramid in terms of demand generation up the way that we have seen in the case of the premium or the upper end segment. And the second most important factor for the market is the private capex cycle. As you know that a lot of the heavy lifting so far has been done by public capex, both central and state. And now with capacity utilization levels reaching somewhat above average multiples, we would possibly wait to see whether the next leg of the private capex cycle kicks off. If you look at corporate balance sheet, bank balance sheets, all of that is well in place, and our expectation is that that kicking off could also be a trigger that the market could watch out for from here on.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.